And while these numbers are most definitely positive, it does bring to question if the Federal Reserve should now cut interest rates in November. The U.S. economy is the envy of the world. While it's not perfect by any means, recent retail sales numbers and labor market numbers show an economy that's firing on all cylinders. Now, in this video, we're going to discuss this recent U.S. economic data, and we're also going to talk about how they might influence the Fed's next interest rate decision. Now, before we get started, let me just say that if you like content like this, leave a comment down below letting me know what you think. Make sure you subscribe for more content like this and hit that thumbs up button for me. The U.S. consumer is responsible for more than 2/3 of U.S. economic output. Now, retail sales numbers in September just came in at 0.4%, which was higher than the expectation. These numbers show an American economy that is nowhere near a recession, and these numbers also complicate the Fed's next interest rate decision, which is coming within a couple of weeks. Now, these numbers are kind of boosted up when you look deeper. It's a lot of consumers spending on credit cards, going into debt, and quite a chunk of the spending comes from high-income households that are moving the numbers. But nonetheless, the U.S. consumer is moving the economy forward, and the retail sales numbers in September, they beat expectations. And all of this right before a big spending spree that we can expect with holiday spending. So while the September numbers might be good, when you look at October, November, and December, those numbers are usually typically pretty high because of the holiday spending. Now, weekly jobless claims also came in lower than expected. 1 week after hitting their highest levels in a year, jobless claims came down to 241,000. Now, the big jump from the other week had a big part to do with the hurricane activity that went on. That drove the numbers up, and the Boeing strike as well. You're getting more jobless claims because of that going on. Now, major companies are still laying off people. You are still seeing big number of layoffs that come in from different companies. And all this labor data is really to be taken with a grain of salt. It's usually revised very often, but nonetheless, the numbers that we have coming in, and even the revisions that we see, it does not show you an economy or a labor market that is heading for a recession. And all of this leads us to the Fed's next interest rate decision. And while these numbers are most definitely positive, it does bring to question if the Federal Reserve should now cut interest rates in November. Now, with inflation being down and cooling off, the labor market was the primary reason for the Federal Reserve doing that jumbo rate cut just recently. And it was widely expected for another rate cut in November and another one in December, both of those probably being a 0.25 rate cut. But with the labor numbers looking like they are, we had a whole bunch of jobs just recently added, and the jobless claims, while last week was a little bit higher, we do have the explanation of the hurricane. And with the numbers kind of going down this week, we are seeing a labor market that's not in dire need of help right now. The retail sales numbers, you have consumers that are still driving economic activity, and a lot of people are questioning if, based off of this recent data now, if the Federal Reserve will cut interest rates in November. And personally, I also think, depending on a couple more reports that come out between now and then, maybe they don't cut interest rates in November if they do not need to. Now, the Fed has hinted that they probably would do so, but they always left it up to whatever the economic data was telling them. Well, all of this recent data kind of shows that you do not need to do anything. You did a jumbo rate cut, and you can kind of sit back. Now, the Federal Reserve might still cut interest rates by that 0.25% to kind of keep things going and moving along. But based off of the numbers that we see right now, the Federal Reserve can kind of sit on its hands and just kind of let things flow along as is. Time will tell what they do with interest rates, but this recent economic data makes all of those decisions more interesting. If you like content like this, leave a comment down below letting me know what you think. Make sure you subscribe for more content like this and hit that thumbs up button for me.